Hi everyone, in this video I'm going to highlight my top dividend stock to buy in November, so stay tuned. Remember, investing in dividend stocks can help build wealth for retirement. It can also provide passive income for those that are already retired. Regardless of why you're looking for dividend stocks, I've got a great one for you for November. Home Depot. Home Depot is my top dividend stock to buy in November. The company has done an incredible job compounding revenue at an annual rate of 7.9% in the last decade. That's incredible for a brick and mortar retailer. Right? Remember, they most of their sales come from their physical stores, which is not, a fast growing industry, but Home Depot has been able to grow revenue almost double digits in the last decade. Meanwhile, gross profit margins averaged 34% in that time, and they increased their operating profit margin from 10.4% all the way up to 15.2%. So excellent evidence of economies in scale there. Earnings per share grew at a compound annual growth rate of 20%. So the top line is growing at 8%, the bottom line is growing at 20% compound annual growth rate. Excellent numbers here. And of course, earnings per share is important for dividend investors because that's where dividends are paid from. If a company does not earn sufficient profits, it cannot support a dividend payment, because if they're supporting a dividend payment from their existing cash on the balance sheet, eventually that cash will run out, and then if they're borrowing to support a dividend payment, eventually they'll exhaust their borrowing capacity. So the fact that Home Depot is supporting its dividend payment with excellent profit growth is good news for investors in the sustainability of its dividend long term. Furthermore, the dividend has increased nearly 6 times from $1.12 in 2012 to $6.60 in 2021. So investors over the last 10 years have seen their dividends per year increase by nearly 6x investing in Home Depot. And the fact that they're supporting that with excellent earnings growth means that dividend investors of today could reasonably expect that Home Depot's dividends will grow over the next decade as well. Maybe not at the rate they grew in the previous decade, but they could expect them to grow over the next decade. Another great reason why Home Depot is my favorite dividend stock to buy in November is because it's demonstrated its moat, right? It's demonstrated a competitive advantage around its business that Amazon and other online retailers were not able to penetrate. Amazon crushed many retail businesses over the last 2 decades, but Home Depot's business actually, grew in that time. It did relatively well in that time, and it's because of the types of things that Home Depot sells. It will be difficult for Amazon to encroach on that business, and that was demonstrated over the last decade. However, investing in Home Depot as a dividend stock is not without risks. One of the risks I highlight here is that consumers may be feeling home improvement fatigue. During the pandemic, home improvement was a popular pastime, and now that economies have reopened and consumers are returning to some pre-pandemic habits, they may not want to take on any more home improvement projects. Maybe every room in the house has been painted already. There's nothing left to be painted, and so that could be a headwind for Home Depot over the next few years. And then finally, the other risk I note here is falling home values. Home Depot's management has always said that one of the main reasons that encourages people to spend money on home improvement projects is when they see the values of their homes rising, because then they see the spending on their home as an investment rather than an expense. But now that home values have begun to fall in the last 2 or 3 months, and all signs point to continued falls over the next few months as the Federal Reserve increases interest rates, that could provide continued downward pressure on home prices, which could then pressure spending at Home Depot. Nevertheless, those risks could be priced into Home Depot stock. If we look at its valuation here, I've provided a chart of Home Depot's price to earnings and price to free cash flows going all the way back to before 2014, and you can see that the price to earning of 18 is nearly the lowest it's been going back all the way to 2014. This could be because investors and the stock market are pricing in these risks facing Home Depot. So the risks could be priced into the stock. The price to free cash flow ratio, the stock is not as cheap according to this ratio, but I will highlight an asterisk here with the price to free cash flow. The company's cash flow has decreased because of an inventory buildup. Home Depot has ordered excess inventory just to be safe, to secure enough inventory for the upcoming few quarters, because as you may already know, the coronavirus pandemic has caused supply chain disruptions worldwide, and Home Depot management, to be safe, has front-loaded their inventory orders, and that's created a use of cash flow, and so that's the denominator has decreased, and so that's caused this ratio to look expensive, but it's because of this feature of increasing inventories, right? So a more informative ratio would be to look at the price to earnings ratio for Home Depot, which shows that the stock is relatively cheap, which supports the reason why I say Home Depot is my favorite dividend stock to buy in November. All right, so I'll see you guys next month for the next installment of my favorite dividend stock to buy. And if you've gained some value from this video, please hit the like button and subscribe. It helps support my channel and helps me create more videos like this one. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.